Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on the euro currency. So we're gradually coming to final stage of this week. So this is gross domestic product release within a few hours. United States will be published the report for the preliminary data for the first quarter in the United States. Why this report is so important? This report could become the break-even point and could change the sentiment of the Fed, because if market in the first moment could show not really strong reaction, but within a few sessions, I suppose, if everything will go as we expect, this could lead to significantly longer term downward action on the euro currency. Right now, guys, market expects 1.8 to even % of gross domestic product. But there are rumors and expectations exist that in reality the data could be significantly higher than the consensus. So something around 2.3, 2.4%. So this is really significant, significantly greater fact value that could be released. The background of this expectation stands in two moments. First of all, as you know, probably maybe somebody of you knows the gross domestic product formula. It strongly depends on the consumption. And in the first quarter in the United States, this was really good data on the consumption, on the retail sales. Even the trading balance have been improved in the United States. So that is the first situation that gives the hint that probably data should be better. Second, not everybody has paid attention to words of the James Bullard, the member of the FOMC committee. He said that the bad or just worse statistics that has been expected is a temporal moment, and situation will improve and already starting to improve. It means that the data should change in a nearest time, and there is some expectation exists. For example, the Phantom Consulting also tells about it. We put this information in our weekly report that they also expect to see better than expected gross domestic product release. If this really will be so, and today we will get the positive surprise in data, we expect first to drop short-term reaction of the market, and on the daily chart, we know it stands around 111. Market is not at oversold, so result stands 110.60 approximately. And first reaction could be not just hitting of this area, but even greater downward action. Market could hit as far as 110 maybe. So it depends on how really better data will be. But this is not actually even the major thing with this report. The major thing is that in May we will get the Fed meeting. And on such a background, when you have the positive gross domestic report, you have the positive improving data within the first quarter, we strongly suggest that Fed will give the hint on the possible rate change in the second half. That will be just first hint. Will not be the guarantee that yes, we will increase the rate somewhere in July, for example. But they should change the rhetoric. And if on last session they said that rate hike is off the table this year, we suggest that if on the background of the positive data, they could change the rhetoric and could change the sign of the overall statement. And market right now absolutely not prepared for this step, because if we'll take a look at the federal fund rate futures, they do not suggest any rate increase. Even more, they suggest rate decrease closer to December for the 25 points. So we'll see the probability of the futures right now is trading We will also put this information in our weekly report. So taking it all together, the positive data could become the breakthrough moment when the situation and the sentiment on the market could change drastically. So, and that's why it's so important. Even if today we will not see a really big reaction, strong reaction, within the few sessions when the market just spend some time, investors will think about the situation, that could make the strong impact in later sessions, maybe next week, when they will sleep with this new information. But this will be valid only if indeed we will get the better numbers. So now what we have on the technical picture. On the daily chart, I already said that here just minor target, but if data will be really positive, we could get the strong collapse and the market could hit the 110 area. On the 4-hour time frame chart, we see some another targets. So first of all, you see that 1618 extension of this butterfly coincides with the daily butterfly. We talked about it yesterday. Slightly lower, below the 111 area, we have the also intermediate target, kind of the ABC top OP, the 1060. This OP coincides with the daily oversold. So this will be significant barrier, and I'm not sure, maybe, so the floor probably of the session, despite what the data will be, should be somewhere at 110, 110.50. I just do not know what the strength in the market will be, and whether it will be possible to break the 1050 support. But currently, let's keep in focus at the 1050 as the major target for today's session, if indeed it will be positive numbers. Because here we also have the OP right at the daily oversold. On the hourly chart, yesterday we talked on the retracements, guys. But yesterday, our market wasn't able to show even minor retracement. So 30% has not been done, and market has dropped more. Now we have this situation. Take a look. We have the A, B, C bottom. First destination of the possible pullback stands at the around 111.60. This is OP agreement. XOP stands in agreement 11.85, 11.88. So that's the next strong resistance area. Well, personally, I'm not sure that market will show any of this retracement at all, because market stands very close to the target, guys, on the daily chart. It's just few pips stands above the target. And when such situation is forming, market usually gravitates to the target, and any bet on expectation of the pullback here is very tricky. Besides, currently I see some kind of the bearish dynamic pressure is forming here. So you can see that market is forming lower tops here and here and here, but trend stands bullish, and it suggests that here could be drop. And for example, market could hit 111 just by some butterfly here. So if we will get the retracement, very good. So we will be able, maybe somebody of you who would like to make the bet and take the position in today's mess with the around gross domestic product, if you would like to take the part in this madness, so you could try. But as I said again, the expectation of this retracement is a really tricky moment, and it's not the fact that that will happen. Despite that, currently this pattern looks really nice and it could be formed. So that being said, if you already have shorts, you could keep them. Just protect your position, manage your stops before a gross domestic product release. If you would like to take the long position, guys, it will be better to wait for data. Because if data will be worse than expected, you will get the bullish reversal patterns. For example, on the daily, this will be the butterfly. By some volatility, actually, I think that market should spike this target anyway. And with this butterfly on your back, you could try to take the long position, but you need to get the protection from the worse than expected gross domestic product. If you would like to take short right now, well, in this case, you could just keep an eye on the possible pullback. So if we will get any retracement here on here, well, that will be the chance for taking part. But taking the part that's right now, guys, you're just will dive in all the mess with the gross domestic product release. So it will be some kind of the gambling. Those traders who already have shorts, they already have protected them with the break-even stop, and they do not care much about what the number will be. So they already have the position. But taking the position right now before the gross domestic product release, this will be really tricky action. It could be expensive, very volatile, and you need to think twice before taking the trigger the bottom. So that's overall situation on the euro. It's a bit sophisticated, but the perspective is really thrilling.